Hey guys, what's going on? Jeb here, and in today's video, we are going to be discussing the differences between hodling and trading, and I'm going to be showing you through Bitcoin technical analysis how you should approach profiting in a downtrending market, the likes of which we are seeing right now. As you guys know, Bitcoin has pulled back over $7,000 from its all-time high at $58,000. We're currently trading at $51,000. In today's video, we're going to be doing analysis on this market, but I'm also going to be showing you how you can make the most profit in a downtrending market such as this one. If you enjoyed today's video, consider hitting that like and subscribe button. But without much further ado, guys, let's go ahead and dive right on into it. Hey guys, real quick, before I forget, we need to talk about Bybit. If you're serious about trading crypto, you'll need an advanced and extremely reliable exchange like Bybit. Bybit will allow you to stay up to date on real-time market fluctuations and informed on what your crypto is doing. Bybit has industry-leading security with all client funds being stored on a multi-signature cold wallet. If this is what you've been looking for, sign up with our affiliate link down below and get started trading on Bybit today. You guys know that we've been covering this downtrend extensively on the channel recently, and from bottom to top, we can see that Bitcoin has pulled back over 11%. The last 2 days have seen a 14% rally on Bitcoin, but we are still down from our previous all-time high. And something that a lot of people wonder whenever Bitcoin moves into a pullback like this is, how do I actually profit in this market? Should I just leave? I mean, think about it. Have you looked at your portfolio recently and been thinking every single day, wow, okay, now my portfolio is worth 2% more. Now it's worth 2% more. Now it's worth 2% more. We have been spoiled over the last several months because as we look at our portfolio every morning, it goes up and up and up. And it's almost a fact that we've forgotten what it looks like when our portfolio goes down every day. And it can become very concerning. It can really mess with your mindset if you think, gosh, my portfolio is going down. So in this video, I want to show you exactly how you can prevent that from happening. The very first point that you need to understand about working in cryptocurrency markets is that there are two ways to look at the market and there are two ways to profit in the markets. Let's start with the two ways to profit in the markets. Number one, you can hodl or invest. And number two, you can trade. Generally speaking, hodling and investing is a tactic that's going to work very well in a bull market. It's going to work very well when the market is consistently going up and up and up. That's that 2% day over day increase that we talked about a second ago. Trading, on the other hand, takes a lot more education. It takes a lot more wisdom about the market, and it takes a lot more activity in the market. You have to go through the market and place trades over and over and over again, longing and shorting the market in response to the volatility. And that brings me to my second point, which is the two different ways that you can look at the market. You can either look at the market as being volatile, or you can look at the market as growing. The difference is here that when you look at the market as volatile, you realize Bitcoin moves to the upside and it moves to the downside. Wow, that's really, really obvious, isn't it? Well, the implication might not be something you've thought about, because the simple fact is when you're investing in the market, you only make money when the market goes up. However, when you look at the market through a lens of volatility, you realize that there's volatility to the upside and volatility to the downside. The implication for that is that when Bitcoin pulls back 22%, if you're an investor, then all you're going to be able to do is look for places to buy into the bottoms of that market so that you can hold it for the long run, which, by the way, is something you should be doing. But if that's the only thing you're doing, you're missing an opportunity. And that opportunity is using this volatility and shorting the market, betting against the market, in other words, and looking at the market as a trader. Guys, to wrap this entire video up into one bow, it is this. You can look at cryptocurrency markets and profiting in cryptocurrency markets in one of two ways. Either one, you can be a trader who profits off of volatility, or two, you can be an investor who profits off of long-term growth. Let me make myself very clear. You can be both, and I encourage you to be both because both have their own benefits, but both have their own drawbacks. Right now, as Bitcoin is pulling into a new downtrend, it's going to be harder to make consistent profits as an investor, so I would encourage you to make sure that you're looking at this market as a trader as well. I want you to remember a key point, guys. As a trader, you make money off of volatility, not increased growth. You make money off of increased growth as an investor, but if you're trading in the market, you can long the market, buy low, sell high, as easily as you can short the market, sell high and buy low. Once you've understood this, you will understand how important it is to invest in your education in cryptocurrency, because if you invest in your education, you will become a profitable trader and you will be able to make money in any kind of market. Tell me in the comment section down below if you've been struggling with that fear in your mind that your portfolio is going down every day. Well, it doesn't have to be that way. If you invest in your education and you gain experience in the market, you can become a profitable trader and make money in any kind of market. To wrap the video out, I want to use a final point. Many people lost a lot of money in the 2008 financial crisis because their homes lost value, because their stock portfolios lost value, because they lost their jobs. But the people that had experience and they had resources and they had cash on the side made millions in the 2008 financial crisis. Why? Because they were able to short the market, which is a form of trading, and they were able to buy and hold, a form of investing, when they bought the bottoms. In the 2008 financial crisis, the stock market plummeted 50 to 60%, but people made billions during that time. Why? Because you don't have to rely on the market continuously going up and up and up to make money. There is opportunity everywhere so long as you have the experience, the knowledge, and the education to capitalize on it. So I would encourage you guys to invest in your education. If you would like to do that with us, we have something called the Cryptocurrency Technical Analysis Academy, linked in the description box down below. And guys, I want to remind you, it is our mission here at this channel to give you the tools that you need to reach financial freedom, so subscribe to the channel if you haven't already. Anyway, guys, that is going to wrap it out for today's video. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.